Hey everyone, in this video, I'm going to be doing some technical analysis with you all on the S&P 500. If you've been keeping up with the news, then you probably know that the S&P 500 is at all-time highs, and this past Friday, it actually just made a new all-time high. At the same time, I'm hearing people call what we've been experiencing today a brand new market, or the economy is in recovery mode, recession is over. And when I hear this, but I also look at the economic data and see how poor it is coming out of the US, and also the fact that we had the biggest quarterly decline in economic productivity of all time, something just doesn't really fit there. And as we know, the stock market is not the same as the economy, and the stock market can do better or worse than the economy during specified periods of time. However, we know that there is usually a correlation, and right now we're actually seeing the opposite. As the stock market has actually performed better, economic data has worsened. Now, recently, we are seeing some numbers that are showing a slight hope in a recovery, such as improved consumer spending and lower unemployment. However, it still seems that the stock market is acting irrationally. And how can we kind of gauge this in a more objective light? There are two ways that we can really analyze the market. And the first way is what I've already done in my playlist, US stock markets. Definitely check that out if you haven't already. And that is through fundamental analysis. The other way to analyze markets is through technical analysis. And this is just looking at the charts and seeing how price reacts at certain points. And again, I know some may be intimidated by technical analysis. And that's why I wanted to start with the fundamentals, because I think that's really important to cover anyways. But I'm going to show you that it's not so scary and that we can really get a unique perspective on the market by looking at the technicals and really zooming out. So in this video, I'm going to be drawing some lines on the S&P 500 and trying to make sense of a market that doesn't seem like it makes very much sense, and seeing where it might go in the next few years, and also one line in particular that I think will amaze all of you. All right, so here is the S&P 500 on the daily scale. So each of these little candles represents a day of price fluctuation. So again, when we don't really understand what is happening in the short term, it really helps to zoom out. What we're going to do is we're going to change this from the daily scale to the monthly scale. So now each of these little candles represents a month of price fluctuations. And now we can see the last 25 years of the S&P 500. Now these price fluctuations, we're going to disregard those and look at the historical context of the S&P 500 and try to use the past price action to give us more information of where we might be headed in the future and where price may react and pose as a good buying opportunity if you want to own the S&P 500. So first, what we're going to try to do is find some important tops and bottoms in the market that meet at similar price points. So for me, I see one right off the bat. We're going to start from the bottom first. So we can see right here, the market bottomed right over here. This was at the bottom of the dot-com bubble, and it bottomed at a pretty similar point right over here after the financial crisis. And so we're going to just put a line right around there that reacts with these 3 points and basically represents the bottom here of the 2008 crash. So this line is something that we call support. And so when price hits this point, it tends to not want to go below it, or there are a lot of buyers that come in at that point and buy up those stocks to prevent the price to go any lower. Next, I see another horizontal point right around here where price reacts here and here. And so we'll go ahead and draw that in. Looks like that's right around 1550. So this is the top of the dot-com bubble and the top of the S&P 500 before the financial crisis, and that's right around 1550. So this is acting as resistance, and resistance is the opposite of support, and so it's basically support on the upside. And so when the market tries to break a certain point going up, it faces resistance from more sellers looking to sell at that price point. And so obviously resistance and support do not always hold, and that's what we call a breakout. And so what we're going to do is I'm going to draw the support lines in green, and I'm going to draw the resistance lines in red. So let's zoom in and see what happened when this market broke through resistance. So what happened We broke through, we came back down and touched this resistance and then continued going up. And so after resistance is broken, it's now support. And so what we're going to do here is this is resistance until it breaks. And what we're going to do is we're just going to draw another line to basically represent the fact that this is no longer resistance, it's now support. There we go. And so we can see that resistance can change and become support after the market breaks through it. Now this is still support. It was resistance back here. We didn't really know it yet because we didn't have these data points to really understand that this was important support. And so when we zoom out, we can really get a wealth of information based off of how the price reacted in the past. So let's keep on going here. I see another point that is some horizontal resistance right around here. This is during the 2016 correction where the market was kind of going back and forth. And so I can see some resistance here and some support here. And so before this was technically resistance, we didn't really know it yet because we didn't have these data points. And this ended up forming resistance. And so we can see here that we broke it in the middle of 2016. And what happened? We broke through it, we came back and tested it and bounced off of it. So now from here, this is support. And also this is also support. So we'll just go ahead and draw this. So the question is, do we have any more support and resistance beyond this line? Any more horizontal support and resistance? And to me, there's not really much more horizontal support or resistance up here. You could maybe draw this line, something like that, where we have this price reaction and this price reaction, and these candles don't really stay below this 2450 area for very long. But to me, really the best way to kind of represent what we've been seeing, this is from the beginning of 2018 to today, is it looks like a kind of expanding channel. And so we can draw it like this, something like that. And we'll expand that out. And you can see this kind of pattern that's been playing out for the last 3 years, where you have a low and then you have a high that's larger than this move, and then you have a move that's even larger than that one, then you have a move that's larger than this one to the upside, and you have a move that's larger from the upside to the downside. And so we're having this increasing volatility that is really making the market have wild swings. The real question is, when is this kind of pattern going to end, and when are we going to have a change or continuation of the trend? And as we know, the long-term trend has been up. And so are we going to continue this trend up, or are we going to break this trend and start heading lower and have a new trend to the downside? Now, you all already know my opinion because I've shared that pretty clearly on my stock market videos. What I want to do is draw some different trend lines to give us some idea of where we might be headed next and how high we might continue to go. Because as we can see, we're already at some important resistance over here from this kind of trend line, but we're going to go ahead and disregard this and just focus on some simple lines. So first, we're going to start where this trend originates. And this is right here in 2009 at the bottom of the 2008 crash. And all we're going to do is just draw a simple trend line from the bottom. And we're just going to start connecting some other important lows and just see where this goes. So we've got one low right here, and that's some support. And we've got another support line from here connecting to this line right here. So let's see where these lines go. And we can see here that this channel right here with support all the way through. And you can actually draw this line in different ways. And I'll show you how slightly different you can draw these lines and actually get different price reactions. And that's why technical analysis can sometimes be subjective. Everyone has a different perspective based off how they do their analysis. And so if I just draw it pretty simply, we can actually see that it really only touches here, and this was another, it came close to this, but we didn't really touch it here. If we change how we draw this line a little bit and make it a little tighter, we can actually have more price reaction. So we can draw it in a way where we can get this price reaction and also get this price reaction. So we can draw something like that. And so a lot of times technical analysis just comes down to being able to adjust your analysis in order to figure out where price reacts. It's not always going to be perfect, but it can give you a good idea and kind of show you some opportunities to buy when a market is moving really fast. And so if you kind of had this line and understood that this was support, then this could have given you a good, at least short-term buy if you were already looking to get into the S&P 500. Now, this line is one of those lines that I think will just blow you away, because we look at this, we can see that all I did here was just draw this line from the bottom of the 2008 crisis and connected it to the first key low that we had. So it was in July of 2010. So as we can see here, obviously we didn't know of this line back here. We come back over, we draw this line, we can see that we break through this trend line, which was support back then. So this is green, and then it became resistance. And so after this, we tried to bounce up, and price was rejected here, came back down. So now we know this has become resistance after it's broken through. So what we're gonna do is we're gonna draw a line here, because from here on out, this became resistance. And so we're going to draw this as a red line, because that is resistance. We're going to make it a little bit bolder so we can see that red. And so now let's watch this and just follow it up. So this is from 2011, wasn't able to break it. And we came back up, got close to it in 2013, came back up to it at the end of 2013. We weren't able to break it. Tried it again, tried it again. So this is really showing you a very clear trajectory of how price was reacting through from 2011 all the way up to 2015. And so we had this little correction here in 2015 around the 2016 election. And then we ended up climbing up very steeply through 2017 and ended up touching the same line. This is the same line all the way back from 2008. And so what happened, we ended up reacting right off of it, came back down, came back up, failed to touch it again, and then back in at the end of 2019, at the beginning of 2020, we touched it again perfectly, crashed during the reaction to the virus, and now what has happened, we have climbed all the way back up to that same trend line. So this is a fascinating trend line. We can just see here how support from a very key low to the first low, how for the next 10 years really manipulates the price. And it doesn't manipulate it, but it kind of gives a foundation of the trend that follows afterwards. It can also help you form a trading plan, because you could technically make a plan just around these two lines alone and just say, okay, when price gets close to this bottom green line here, and we'll just bolden this to make it a little larger, what I'm going to do is I'm going to buy extra this month, or I'm going to buy extra this quarter, because I want to boost it up my position and get a lower dollar cost average. And when price gets close to this now resistance line, what I'm going to do is I'm going to sell some. And obviously this is not a perfect plan, but it can really help you form some kind of approach. And as we can see here, we got close to this line. So if you sold here, then this market just kept on tracing along this trend line until it finally got exhausted and came back down and touched this trend line. And so, it's not always going to be a perfect plan, but it can help you have a different perspective of the market. So this is what I think is so cool about technical analysis, because you can just draw a couple lines and it can tell you so much about how your investment reacts at different prices. And you can then structure a plan to allow yourself to be more in control of when you buy and when you sell, and not have such an emotional approach to it. So lastly, I want to look at some other trend lines and see if we can find anything from a longer term viewpoint. And so let's just try to zoom this out. We're going back before the 2000.com bubble and just see if we can find anything, because we had a pretty stagnant stock market in the 1970s. So we can see here, let's just really stretch this out. We can see here we have a pretty key bottom here in 1974. So let's go ahead and draw this line from here. Let's see how much we can get. About 2 price reactions. 1974 low, 1980 low, and 1982 low. So now let's take this 1982 low and see if we can connect it to another low. Okay, so we've got some price reactions here. Let's try to connect it there. Does this connect well? Yeah, it looks pretty good. So we've got a reaction from the bottom here in 1982, the low in 1984, kind of the low in 1985. This is the stock market crash in 1987. So it's about let's see, it went from 337 down to 217. So that's over 30% decline. And then we've got another low right here in 1990. So let's see where these trend lines take us if we zoom back out. And this one does not connect with anything, obviously, because that's a very low trend line. But look at this line right here, originating from 1982 to 1984 to 1985 to 1987 and 90, draws the bottom right here of the 2008 crash, right here in 2009. So that is pretty fascinating to me, and to see how these lines have important implications in the future, I think is just really, really interesting. And I think it gives us as long-term investors a tool to perceive what we're investing in, not just from a random kind of viewpoint, but that there is some kind of method to the madness, I guess you could say. And so now we have 1, 2, 3, 4, 5, 6, 7, 8, 9 lines that can really give us a lot of information of this market from a long-term perspective, and can help us limit all the noise and all the emotions that we can see in some of these short-term fluctuations. So what I'm going to be looking for in the next coming weeks and months is, how does price react at this point? We are at this important resistance line right now in the S&P 500. And so it's going to be very interesting, to say the least, to see whether or not we're going to be able to climb this extremely important resistance line that we have not broken since 2011. And it's really traced out some very key highs since then. And to me, I think this is a low probability situation that we break above this, but we've seen some crazy things lately. And now the question is, if we do not break this and we start resuming the move down, how low can we go? And again, who knows? But by looking at this analysis and really being able to zoom out and looking at even all the way back to the 80s and the mid 70s, we can see we have some very significant points of support, which means that there is going to be a floor that sellers are going to have to sell through in order to get price to go below that point. And so oftentimes you want to buy at support, sell at resistance. That's kind of the general idea. So now the question is, where is this market headed if we are not going to break above this resistance line? Now, again, we don't know what's going to happen, but we know that the probability is that this is going to be difficult for the market to blast through, because we can see here that it has not broken this trend line since 2011. And so the question is, where may the market be heading towards if we do not break above this? And so to me, we can just look at this and say, well, this is the closest support line that we have. And so from a long-term perspective, obviously if you zoom into these charts, you can find many different points of support. But when we zoom out, it can really give us a much more simplified picture of a market or security. And so when we're looking at this, I would say this is the next support that we have. And this is around 2550 to 2600, depending on win. And beyond that, I don't really know this is that significant of support. I would say this is the next point of support that is pretty significant. That's at 2100. So that's a very big decline from where we're at now. That's well over 30%. And so below that, we have the 2016 low over here. This is at 1800. This is almost a 50% decline. And we have seen that many times. The dot-com bubble, this was a 50% decline. And the 2008 crisis was about a 56% decline, I believe. And so this, I think, is extremely, extremely possible and realistic when we're looking at the next several years. Now, 50% has been a pretty common contraction in the last couple bad recessions. And I would say that this recession does fit the script. And it's just different because we are heading up like crazy in the stock market. But does that really make sense from a long-term standpoint? And is this sustainable? We hope that the market does not go below this and continues this nice upwards trend, especially if we are already invested. We have to understand that there are other possibilities at hand, and we have to make sure that we can plan accordingly for the worst case scenario. And so I want everyone to be aware of that. And I think technical analysis really shows this in much more of a visual light. And I hope this was helpful and that you all enjoyed this kind of exercise. That's it for this technical analysis video on the S&P 500. I hope you all enjoyed drawing some lines with me and learned a thing or two, and that this maybe gave you an alternative way of looking at your investments and looking at the market, and makes it easier to manage your risk accordingly. Also, stay tuned for a video coming soon where I'll be doing some technical analysis on the NASDAQ, and I will show you how to spot and make sense of a bubble. And I'll also be doing a video coming soon about deflation and the argument about that, and how that poses a lot of concerns to our economy and our investments. So stay tuned for that as well, and I will see you all next time.